we had a bit of a poor start this morning, down by 0.5% just after the opening. Market seems to have turned around, though. We have the JSE up close to 0.5%. We also have European markets looking pretty good today.
Yes, I think Alcoa's numbers came out at the close of business in the States yesterday, and they were surprised to the upside. And I think that the market's starting to take those numbers in. We also just had AngloPlat's coming up with the trading update that came out a few minutes ago, and they say that their earnings per share are going to be about 10 Rand, coming from 1 Rand 69. So a very big improvement there, and that's from the difference in the metal prices and the move in the metal prices. So the market taking really liking those numbers. We saw Anglo American go up with those numbers as well. They're trading 278 from 271 this morning.
And I mean, just looking at the US earnings, of course, Alcoa coming out last night, as you said, a little bit better than expected. We also have JP Morgan Chase, Intel, General Electric all coming out this week. And of course, the market does have pretty high expectations. It's expecting a 27% rise across the board for these companies. I mean, what are the chances that we miss that and we do see disappointment setting into the market?
Well, there are some analysts that are expecting poor numbers going forward, and growth going into the third quarter, and indications from companies saying that the third quarter might be a little bit tough. But so far, Alcoa has been the first one looking good, and I think that we can get the numbers to the numbers that people are expecting. And the more we get those, I think the market will carry on rising. So I think the risk is to the upside if these numbers are reached.
And of course, this is something we chat about every quarter. It's really those forward-looking statements that you're going to be paying particular attention to, because we know the numbers are historic. We want to know what they're going to be doing going into the future, and whether we are seeing enough global growth coming through that's going to sustain businesses, aren't we?
Yes, if you take a look at the IMF, International Monetary Fund, came in and they revised the GDP from 4.2 to 4.6. They're up world GDP by quite a bit then. Even the States has been moved up to 3.3. China's 10.5. India comes in at 9.4 GDP. So there's actually been an improvement in forecasts from the IMF. So that's very positive for us. The one lagging indicator there is Europe, and their growth only looks like it's going to come in from at 1% from the IMF, and that's our biggest trading partner, and that's why we've seen such a slow recovery from South Africa, because our trading partner Europe only got growth from flat to 1%. So it's a little bit worrying on that side for South Africa.
And do you think the worry of that could spur the Reserve Bank to cut interest rates again when it meets later this month? Because this is something that has been talked about quite a lot since Reserve Bank Governor Jill Marcus spoke at her breakfast last week, and she seemed pretty dovish in that statement.
Yes, I think 2 weeks ago you would have said that there wouldn't be a chance for interest rate cuts, but economists seem to be looking closer at the numbers and at the growth of South Africa. Unemployment and the manufacturing numbers are very poor, and they're thinking that maybe we can have another 50 basis point move in the interest rate on the downside. So there is a possibility. We feel that it will still stay unchanged, and maybe only if there's no recovery into the third quarter, maybe at the end of the year, we'll see a cut if it has to be. The rand's relatively firm and holding steady, so it does allow for interest rate cut. But currently, we still think that it'll be unchanged.
Of course, we did have Portugal today downgrading Moody's debt, which really brings it in line with some of the other credit ratings agencies for Portugal. But going back to those IMF numbers and the global growth forecasts, there are some risks there. There's the risk of sovereign default, and of course, we're still having some of those southern European countries being downgraded.
Yes, and a lot of talk about double-dip recession, and I think that a double-dip recession won't happen with these growth numbers coming from the IMF unless there's a sovereign default. If there's a sovereign default, it sets the whole motion of recovery backwards. So the risk is a sovereign default. The European Union has come out quite strongly in the last week or two saying that they will defend the euro and any constituents of the European Union. So it's looking unlikely that there'll be a sovereign default, but that is the risk to the whole recovery, the world recovery.
Well, you mentioned those AngloPlat results, and of course you said Anglo American benefiting on the back of that, up to 278 Rand. And of course this share has been trading around 270 Rand. Do you think as it edges upwards it's still a buy, or do you think it's starting to look a bit fairly priced in these markets?
I think at the low 270s, there's been a lot of buying on Anglos. It hasn't really broken down. Some people waiting for that 250 level once it breaks the 270 level, and that support level's held quite a lot. A lot of buying comes in there and looking positive. I think we can probably see that all the way up to about 290 Rand level. So a bit more to go for Anglo American, and in quite a 20 Rand range from about 270 to 290. Really battling to get through 290 and into the 300s. but managing to stay above 270. So a nice trading range for Anglo American as a trader if you want to trade in that range.
Well, there was a little bit of news coming out this morning in some of the papers. That's about Discovery and giving it another go in the US with Vitality. And of course, the US is one market that Discovery left with its tail between its legs about 2 years ago.
Yes, they pulled out with Destiny Health, and that product didn't work there. I think also the timing was bad. They pulled out in 2008. They did, however, have Vitality currently in the States, and they never pulled that Vitality product out. And it's managed to do relatively well, but on a very, very small base. And the Obama administration is looking to increase the health benefits, as in being healthier, etc., and trying to get the population a little bit healthier as well. And that suits a Vitality product very well. I think they're looking maybe to expand that Vitality product, getting people into the gyms, etc.
Rob, just looking forward to this afternoon, we're getting chain store sales out of the United States, and tomorrow we're getting retail sales both out in the United States and of course in South Africa. What are we going to be looking for here?
Well, we obviously want that American consumer to be spending, and we want those chain store numbers obviously to be improved. We need that American consumer to carry on spending to get to keep that growth coming out of America, and we want that 3.3% GDP number by the end of the year. So we're looking for good numbers there. With spending coming through and retail sales increasing, it helps with unemployment numbers. You know, if those numbers keep increasing, people can start to employ more people, and that's the crux for that American economy to reduce that unemployment rate.
And of course, our own economy as well. And I think we're expecting a figure of about 3.7% growth in retail sales year on year, so up a little bit from the previous month.
Yes, definitely. I think the retail sales are a good indicator of how the economy is starting to spend. There's still problems with the amount of credit that's been given out, still very low numbers, and we would like to see that credit number also slightly get expanded and banks starting to lend a little bit more money. But yeah, positive numbers, and we need a trend of positive retail sales to come through.